and gold had an amazing move. In fact, I'm looking at the chart in 2018, gold was, $1,160 and it ran all the way up to 2075-ish. So, I mean, that's a huge move, $900 or so. My guess is the next move will be somewhat of a what we call a measured move.
Do you think that, that period from 2018 to 2019, where we did see that big move in gold, do you think that could be gold, in a way, sensing and accounting for inflation before it occurred?
Yeah, I do think so. I do think that that's probably somewhat of it. It all coincided with, the Fed at that point. I mean, the move actually started in kind of late 2018 into 2019. And what we saw is, remember, the Federal Reserve started to really get dovish again when they tried to raise interest rates and they backed off, right? So the Fed was kind of in this position of saying, okay, well, we're going to start to tighten here. Gold was just going sideways. And then the market dropped 20%. And then all of a sudden people were like, wait a minute, the Fed just basically told us that if the market freaks out, they're going to reverse course and print as much money as we need. So it makes sense that that would have an impact to the upside on gold. And gold had an amazing move. In fact, I'm looking at the chart in 2018, gold was, $1,160 and it ran all the way up to 2075-ish. So, I mean, that's a huge move, $900 or so. My guess is the next move will be somewhat of a what we call a measured move. So you would look at that same size move and project that out. So another $900 to the upside, that puts us, 2,700 at least.
Mm-hmm. As you're talking about, the market really reacting to the Fed's moves here, considering their reaction to COVID in March of 2020, does the high inflation now constrain them far more in their options of what they can do to save the market in the event of a sell-off here?
Yeah, in the event of a near-term sell-off, it does, right? And again, there's a lot of Americans that are, just going to the store, I'm sure we've all experienced it, is just, the prices have just gone up so much. It's really remarkable. And that does hurt middle income and lower income. And again, I said before that I think when Biden reappointed, Chairman Powell, he specifically said, I'm going to reappoint you, but you have to tackle inflation because I got my midterm elections and I need people to see that we're attacking this, since a lot of my voting base is that middle and lower income population. So I think that in the near term is the worst. So you have to look at it like what the Fed looks and says, okay, well, which one's worse right now? And right now, definitely inflation is hurting more. Now, if all of a sudden you see a stock sell-off and unemployment goes up to 10 or 15 or 20%, now which ones is the boogeyman, right? Which one do they want to attack at that point? And my guess is that's what's going to happen, is that they're going to have to start shifting back. And maybe at that time, inflation comes back in a little bit. Maybe it's only 4%. And they can say, okay, well, we definitely have to attack unemployment because it's much worse at this point versus which one's the kind of the telltale, which one's worse.
Mm-hmm. So does silver look, about the same here as gold to you, Gareth, or is silver kind of waiting for gold to take the lead?
Yes, silver, I think, the tricky thing with me on silver is just that you have the industrial side of silver. So silver's chart pattern is actually very good as well. It has a little bit further to go for a breakout. So you can see here, again, you have a beautiful bull flag developing. It's at the lower end of it, though. So it has a little bit more to go to really break to the upside. But again, for me, it's one that I'm sitting on the sidelines on, just because I do worry that the economy, if it starts to sputter in the face of a sell-off in the stock market, the Fed tightening, then you have the industrial side of silver maybe drawing it down, price down just a little bit. But again, if you have a 5-year horizon, silver is probably much higher at that point due to the money printing. It's just in the near term that I'm trying to look for where I want to enter it. And I do have a level here. So, if we were to get one more sell-off in silver, this $19 level, 19 and a quarter level is just massive support. And this, I would absolutely start accumulating down here. So I am on the sidelines. I'm long gold. I'm long gold miners at this point, Newmont mining, a few other ones as well. But for silver, I'm still sitting on the sidelines just because I'm just not sure the price action just yet.
Mm-hmm. So when you mentioned Newmont, Gareth, is there just simply a technical pattern that you're seeing in that chart that makes you like that, or is it from a fundamental reason as well?
Yeah, it's really just more of a technical analysis side. So again, Newmont has much the same chart. In fact, I can pop that chart up for us. You basically had that same sideways consolidation. I like the fact that you've held this pivot low here, which actually extends right back to here as well. And again, you're kind of in that same consolidation move here. But again, it gives me that exposure. I'm buying in at the low end here. This is kind of where I entered right down here, where I have a lot of upside just to get to resistance. It's on support and the bull flag is fully intact. So it's just basically giving me another avenue of exposure to what I think is coming in gold and in the metals over the longer term. Absolutely.
Excellent, Gareth. Is there anything else you'd like to go over before we wrap up here?
For the most part, I think people just need to expect 2022 to be much more volatile. I think the Fed kept, the VIX, for instance, volatility down over the last few years because of the amount of stimulus. It was always kind of the cushion in the underbelly of the market. So you got to be ready for more volatile moves. I think 1% to 2% daily moves is going to be much, much more common. And then I think just be ready to trade. It's going to be more of a trader's market. I don't think people that are buying and holding will make as much money as they're used to from the last 5 years. And then lastly on Bitcoin, I think, again, eventually Bitcoin breaks lower. I did want to mention that I did launch a new website just for cryptocurrencies where we trade cryptocurrencies. It's verifiedinvestingcrypto.com. And again, it's an awesome place. We've had great success in swing trading, purely technical. There's so many hypers out there. This is a pure technical thing, just like all my chart analysis is. So please, check that out if you guys are interested.
Excellent, Gareth. How about some longer term, let's say by the end of 2022, targets for gold and silver here?
So I would say the low end target for me is around 26 to 2,700 on gold. I think high end could be close to 3,000. That would be kind of the bullish case that you could come up with, but that is a possibility. I know it's a huge move, but it definitely has potential there. And then I think on silver, I would just look for silver, be a buyer at 19 or right around 19. And I think silver again it's hard to know time wise, but I wouldn't be surprised if silver has a move north of, really, I think, again, at some point, you're going to see them move up to close to $50 on silver. So, I mean, there's some good opportunities out there. I would be definitely more focused on the metals and foreign stocks. I'm more short U.S. equities right now. And then just, again, look for those cues from the Federal Reserve.